Man, just when things started going better for Tesla, we just had some bad news about Elon Musk's pay package, which we've got to talk about. It's got me shaking my head because I don't understand why things like this can happen in America, but I will talk about it and try to break it down. Then in this video, we are also going to talk about what the Fed is doing because they are setting up for something interesting, and I'm trying to understand why. So let's go through some of the data. Let's go through a little bit of what happened today. Keep in mind, I am literally buried, not only in planning and the production and making for the new course, but house hack, robo hack, and flight train, flight train. Okay, like what is that? Pre-solo written exam. Okay, like there's a lot going on, and there's construction going on over here. Anyway, let's just get into this. Okay, so point is, I'll be live again, starting next week. Should be. Okay. All right. So here's what we got. First of all, a lot of people are going to be worried about what this is going to do to Tesla stock price. Tesla stock right now, it's only down about 1% in the after hours. It hit a high today. Well, not quite. This morning in the Alpha report, I talked about it, probably rejecting off that 160 to 164 level. It rejected off of, 360 to 364 level. It rejected off 360. And so basically now it's a little bit under 360, but it's above that 347, which is a great place. So if we're going to have a little bit of a sell down tomorrow, I think it's okay because you've got a really strong floor at 347. You lose that, you go to 318. But the only way you really lose that is if you actually think that Elon Musk is going to not win an appeal, because Tesla, the board of directors, and Elon Musk are going to appeal the canceling of this pay package. Right now, the pay package is worth $101.5 billion, which is the largest pay package ever in history. It puts Musk's wealth at somewhere around $340 billion. It's like a third of a trillionaire is what Elon is right now. It's insane. A third of a trillionaire. Dude, wow. Okay. Anyway, when the package was awarded, the package was only worth $2.6 billion. And when the judge canceled the package, it was worth $56 billion. Now remember, Judge McCormick denied the first package because she argued that shareholders were not properly informed about the conflicts of interest related to the board members at Tesla, like, Kimball Musk, his brother, sitting on board, right? Approving and taking part in Musk's compensation plan. Now, a lot of this started because a person with 9 shares who was a drummer, not that that really matters, but that's what he's kind of known as, Richard Tornetta. I'm probably butchering his name, basically filed a lawsuit claiming that Elon Musk was being unfairly compensated. So Judge McCormick is an interesting one. She's a judge with a bachelor's degree from Harvard. She got her JD, so her law degree, from Notre Dame. It's a great schools. A lot of people are like, oh, no, they've all gone woke. Okay, whatever. She's 45 years old. She is the first female in Delaware's history to sit on, the tile of judicial, in the type of judicial seat that she sits in. She is someone who has actually dealt with enforcing contract law quite a bit in some high-profile cases, including one already involving Elon Musk. Going to talk about that. Just keep in mind, we're going to talk about the Federal Reserve in just a moment. I just want to get through this Tesla stuff, and then we're going to talk about the Fed, what just happened with rates. Okay, I'm going to talk about that. One second. You got to get that free Keurig coffee that I couldn't find another way to cool it down, and I don't recommend it. I poured some sparkling water in it. Don't recommend that. Nasty. Anyway, so the judge ordered another sort of cake acquisition, like a bakery, basically, company there was an acquisition going on for a cake company during COVID. COVID hit. Acquisition started before, then COVID hit. A company didn't want to go through the acquisition anymore, so they tried canceling because of COVID. And she's like, Delaware contract law, that is not material, that does not rise to the level of a material or adverse change. You must continue with the acquisition of that cake company. Now, why does that matter? Because it shows you she's really big on that Delaware contract law, maintaining that reputation that Delaware has for enforcing contracts. In fact, when Elon Musk went through the Twitter acquisition, guess who the judge was to basically force Elon Musk to acquire Twitter? Kathleen McCormick, the same Delaware judge. So as you can see, she's a big fan of maintaining that reputation of Delaware being great for contracts and corporations. But this one's where a lot of people are like, wait a minute, you're watering down the reputation that Delaware has for being good for contracts, because now you've literally had two shareholder votes. You had a shareholder vote back when the compensation plan was approved with a very clear trajectory. If we hit these milestones, we will get this sort of compensation. And shareholders approved it then. And then this cycle, you had another approval this summer. Like, in fact, I made a video. I said, there's a good chance Tesla stock's going to skyrocket here. You'll look back at my channel. I said it multiple times. I said, there's a good chance we're going to skyrocket here because we are going to get rid of the uncertainty of the pay package, and volatility is at a low level that we have not seen in like 3 or 4 years or whatever it was at the time. And it did. Now, I wasn't expecting for it to skyrocket again from where it went to. I thought 265 was pretty good. I'm like, all right, now the valuations get a little stretchy. Now we're in the mid threes. So in fairness, it just kind of keeps going, which, that's just what Tesla does, which is great. The question now is, how does this affect Tesla stock going forward? So a few things. Let me wrap this up really quick. A few thoughts to wrap up over here. First, on the judge. A lot of people getting pissed at this Delaware judge for this, because you now have two shareholder votes that are saying we're okay with it, because the second shareholder vote also reapproved. And basically shareholders are like, look, we get it. We understand what happened then. We still approve it. So now a lot of people are like, this judge is just straight up corrupt. This judge is an activist. The public, the shareholders, the ones who would potentially be hurt by this pay package, are saying, please give him the money. Give him the money we promised him then. Yes, we still want to pay him that. So, like, in a weird way, if Elon doesn't get this pay, you've actually undiluted the stock by 10%-ish, a little bit more than that, right? To the tune of $101 billion. So theoretically, the stock should go up. But the reason it won't is because you reopen the door to uncertainty until an appeal goes through of, okay, well, what happens when a new compensation plan is installed? A new compensation plan, not with new milestones, but paying him basically for the stuff he should have been paid for, and new milestones, could be more expensive for Tesla, and it reintroduces that darn uncertainty. At the same time of that uncertainty, you have a lot of uncertainty going on in auto manufacturing. The strikes just started with Volkswagen. Bloomberg Intelligence just this morning said, we're at the early stages of an automotive pricing reset, which is really interesting because I thought that's already what's been happening for the last 2 or 3 years. But they actually, well, maybe not 3 years, the last 2 years, auto prices have certainly been coming down. But especially used car prices, plummeting. Look at what you can get used Teslas for. Great deal, by the way, okay? Like, no referral code for them. I'm just saying, like, you want a Tesla with autopilot, you pay $8,000 for a new Tesla with autopilot, you probably pay like $1,000 for a used car with a used Tesla with the autopilot, for the autopilot. Like, it doesn't hold its value. So look at that. You could compare the market rates for it. But anyway, Bloomberg Intelligence says that pricing right now for vehicles is 23% higher than the pandemic, and that discounting is still below the levels we saw in 2020, even though inventory is way up. So in other words, pricing is higher. We're still not at the high levels of discounting we usually see in autos. And there are 50,000 2023 models that are still unsold at companies like, GM or otherwise. So, in other words, you have this potential of introducing a lot of uncertainty for Tesla. Let's go ahead and write some of these things down. So I actually conveniently have a whiteboard here, which is very convenient. On this whiteboard, by the way, I was, in our pilot lessons, we were actually charting out the trajectory we're thinking for pricing. So it takes me like 3 hours to sit down and change all the pricing, so I haven't done it yet. But once that Trumponomics course goes up, it's going to go, I hope you can see that. I don't know if it reverses it, but from $299, at least $420, maybe even $5 or $620, just for the Cyber Week here. So right now it's still here. If you want in that Trumponomics course, I expect when those lectures come out December 17th and you actually get access to Course Member Lives and trade alerts and everything, this could be $1,000, close to or more. Haven't figured that out yet, but I just thought I'd mention that. Go to meetkevin.com. Remember what that includes, okay? Just think about that. But let's talk about Tesla in terms of risk factors that we have now. So the first risk factor that we really have to think about is now we have share uncertainty. And in addition to this share uncertainty for Elon, there's part A and there's part B. So part A is the compensation plan. Part B, I really hope this mirrors. Part B is the part where Elon Musk said he wouldn't sell shares in 22. He sold a bunch of shares. The stock tanked. 23, he said he wouldn't sell shares. 24, he said he would try not to, but he might. All right, so we're getting closer to 2025. Where is he going to sell shares again? I don't know. I mean, he's got plenty of net worth to where now he should just be able to take out little margin loans, right? And it'd be a fraction of what's worth. But maybe not if that comp goes away. So is there a B, risk of some Elon selling pressure? That should be a buy the dip opportunity. Then we have vehicle pricing risk. Okay, so our price other vehicles going to get more competitive. This is where bulls like me like to say, hell no, that freaking Cybertruck is amazing. Full self-driving 13 just came out. I can't wait to try it. I'll try it when I'm back home. I don't get to see my 7 kids. I'm a little bummed right now, but I will see them soon enough. So, I don't really think there is competition for Tesla, but I do think to get to volume growth again, prices are going to have to come down. So you're probably going to see prices come down, especially FSD. It's probably the market price for FSD should be closer to like $3,000, probably for new FSD. Anyway, for now. I think you're going to, as much as I think you'll have a clear regulatory framework for robo-taxis, I think that robotaxi is going to face a delay as well as Optimus before we actually turn these into dollars. So I think this path right here is just going to be a little bit slower than a lot of us anticipate. Those are going to create buying opportunities for you. All of this is uncertainty. It creates a buying opportunity for you. So where we sit right now at 355, okay, next stop, 347. Where's our next line over here? Honestly, it's above, top of mind, it's above like 410. I'll look at it really quickly, but it's high. I don't have a fib extension for quite a while on this sucker. And it is 414. Close memory, should be 420. Oh, did you know, by the way, and I posted this on X, you should follow me there. I should also post some Instagram stories for pilot training. It's kind of cool. But did you know that I'm 69 inches tall? Let's go. Anyway, that should be 420, but it's 414, okay? If we lose 347, which is a really, really strong shelf right here, if we lose this, I think we might be heading to 318, 295 after that, 240 after that with a pit stop at that 275, 260 level-ish, somewhere around that 265 to 275 level. No, 70. 265 to 270. So there'll be some buying opportunities because of the uncertainty around this. And I don't think retail is going to sell off this. So you're probably not going to see a lot of movement in the after hours off this. But I do think this will create some downward pressure over the next few months. Yes, there'll be appeals and blah, 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 blah. Is this really going to matter long term? No, I think longer term, Elon will be fine. It's a 10% fluctuation left or right. That's not going to make a difference here. Fundamentally, the valuation of Tesla is high. Listen. One of the reasons I think you want to be part of the Trumponomics course is, Super Microcomputer, how it's doubled over the last few weeks. That's based on pure fundamental analysis. I invested in that around 22, 23 bucks. I send alerts to people when I see opportunities like this, and I'm like, hey, I think this is a good opportunity. In fact, we did the course member analysis together in our course member live streams. And so I encourage you to be part of that. So when I see those opportunities, at least you can evaluate them for yourself. I'm not saying copy trade me. I'm just saying, here's some information, look at the opportunity, see if it works for you, and hopefully the fundamental analysis is killing it. Again, I think there's some room on the valuation for Tesla right now, so I'm not the happiest about buying at these levels. A little bit of exposure I think is okay, but let's say you're trying to get to 20% exposure for Tesla. I think you want like 1/5 of that right now, and then load the boat more, right? As you go down this, maybe at 318, okay, now you're going from 4% to 8. Maybe you're at 265, you're going from 8 to 12%. Maybe you get to 200, now you're going up to 16%, and you get another gift of 150, maybe even lower. That's where you're popping up. And then of course, if it keeps falling at that point, your allocation will actually, out of your entire portfolio, shouldn't actually be rising in percentage level. You could keep throwing money at it, but because the value is going down, your allocation level is not going up. So you need something that's going to go up while Tesla goes down. What goes up while Tesla could potentially go down? Well, you would need a recession combined with a lot of uncertainty for that to happen. And in such a case, you would have something like TLT exposure, or if you're just insane, it's possible if you're really good with the timing, TMF, okay, that's triple leverage. Stay away from that. It's dangerous. You could play that for like 3-4 months, but not long term. None of this personalized financial advice, by the way. But let's understand quickly what's going on with interest rates, because today, before it's actually really interesting. Right now, I'm studying how to land, and today we started doing my first landings, and it's really kind of entertaining. This should be more level here, right? This is where you're coming in onto like the target, and then you're leveling out a little bit. You get a little flare there as you're throttling down, right? Anyway, it's kind of cool because this is a little bit like every time I'm doing this, I'm like, J-Pow, baby, the soft landing. Come on, we gotta stick the soft landing. And I'm like, hey, okay, this is one of the more hard parts. Getting it though, it's really fun. But let's talk about the Federal Reserve, because today we had some Fed speakers today. We actually had 3 sets of Fed speak today. So today we had Waller say he is leaning towards cutting. And when we got Waller talking about leaning towards cutting, a lot of people are like, wait, what's going on? Like, is the Fed sending us a warning? And I would argue the answer to that is yes, they are. The jobs market is slowing. I suspect it's going to continue to slow. And I think bonds are just going to be the best performing asset over the next year. I don't care what ticker you pick. You could be corporate bonds, some of the highest quality corporate bonds, maybe. I don't know. It doesn't really matter. But if we zoom in to the 10-year Treasury today, what we'll actually find is this is over the last month. We peaked out when we got our appointment of Treasury Secretary, subject to confirmation, obviously, Bassett. But let's look at the day here. We actually peaked going all the way into about 10 a.m. We were back up to about 424. And we fell on this Fed speak. Now we're sitting under 420 again. Great number. So one of the things about going back to 420 and below is I think we're on a trajectory towards really getting under 3.5, because rates are so restrictive. I just don't see the hiring that is going to support this boom that would sustain the Atlanta Fed GDP levels where people think it is. Now, rather than speculate more about my opinion of what's going to happen, let's just understand what the Fed is saying. Because right now, Q4 GDP is like skyrocketing. Look at that Q4 GDP, okay? 3.2%. This is insane. That feels overheated. But do you see a lot of hiring going on out there? I personally don't, so I think it's a little loony. But that's okay. People are spending. That could contribute to GDP. But how sustainable that is comes down to jobs. So Waller today says he leans towards cutting, will depend on surprises in the data. Then we had talk from Williams, who talks about we have a strong economy, but more cuts are merited. We're going to be data dependent. And then Bostic says we're going to be flexible, but we're open-minded towards cutting. Waller jumps in with some more, saying there's no indication we're going to have a resurgence of inflation, although Chicago's, the Chicago Fed's inflation nowcast is suggesting there could be a little pop-up in non-core. That non-core pop-up, in my opinion, is the result of some of the oil price movement that we had in November. So we had a little bit of a jump in oil prices in November. If I go out to the 6-month, you could just kind of see, yeah, I mean, it just, you had a couple fluctuations. Your first week was high, your second week was low, your third week was high. And usually they take the measurement at the first and third week, and also the second week. So 2 were highs over here. I don't know if that's what's contributing to the non-core. It could also be food prices. Some food prices have really gone up, like cocoa and coffee. It's just a combination of all of this. And that is so volatile. I don't even really look at the non-core. I just focus on the core, and nothing's really changed there. So I'm still thinking bonds are a great investment, especially as a balance to something like Tesla. Okay, so let's think about this. If the Federal Reserve, 3 people speak today, and all of them are kind of hinting like, oh, we're going to be open-minded towards cuts here. I don't know that they know data. I don't necessarily think they're getting leaked data. It's possible. Sometimes I do think they're getting leaked data. I don't know that what they spoke about today was because of leaked data, but I do think that what they spoke about today was based on what they're actually seeing in the economy. post Black Friday sales? Are we going to get the layoffs? Are we going to get, more hiring? I think they're actually getting on the phone with their contacts, the staff at these banks. They're calling their local businesses and they're like, are you hiring? And the answer they're getting is, nah, man. No, we had a good Black Friday. It wasn't great, but not enough to get us to hire. And I think that's making them nervous. And so now they're coming out, starting to dove us, and they're getting rates down. They're talking rates down. Remember how I talked about this? We literally talked about this when I was buying bonds. I'm like, look, any pop in yields, I expect the Fed is going to talk them down, because if you have a bump in yields, you're adding more restrictiveness to the economy, and they're going to talk the yields down. So you're protected by buying bonds, was my thesis. Now, that does not necessarily mean they do it right away. In fact, the first Fed meeting, it was not the first Fed meeting, it was the November Fed meeting. Jerome Powell's like, oh yeah, yields have gone up. You know what? They've done this before, and then they fell like a whole percent over the 3 months thereafter. He kind of brushed it off. But today, I'm really seeing a Fed here that's starting to talk rates down. And what does that mean for you? It means join the Trumponomics course. Like, you're running out of time here. I just need a period of 3 hours to sit there, and I'm raising that price at least $120. So that's like a almost 30% bump here. Actually, that's about 30%. And then between once I raise the prices over the next day or so, when I get to it, then we'll probably pit stop at like 690. By the time the content gets out, because it's on pre-sale, it's gonna be even higher. So we'll see, something like that. Not predetermined right now, but it's gonna be something big. So anyway, check that out at mekevin.com. Look, I just want to apologize. I want to be live. I want to be here with y'all more frequently, but there's so much going on. So just on a personal note, it is a lot. I do feel a little overwhelmed, but I'm trying to balance it. We've got some great things going on with House Hack. We've got great things going on with RoboHack. We've got great things going on with the family. Everybody's healthy. Everybody's happy. We've got some renovations going on. We've got ADUs going on with House Hack. Investors, new investors, helping employees grow, test, learning, constant studying, managing the channel, whatever. It's a lot. And I really enjoy it. The Alpha Report, for example, daily wealth. Man, the last 3 days I think I've missed, and it hasn't been daily wealth. It's been like twice a week. Well, I got to get back on the groove of that. Sorry. So I love you all. Hopefully, if I could just say from the bottom of my heart, I'm here with you. I love y'all. Really, I wouldn't be here with you without you, right? And I just want to stay on this journey with you. I mean, look, I'm 32. I've got no intentions of ever not being here. And whether I'm right or wrong, I'm just always going to tell you my opinion. I'm going to be here for you all the time. So thank you for being here for me. Thanks, folks. We'll see you. Bye.